Good afternoon, traders and investors. Will back here with another one, coming to with a Friday market recap, and I hope all of you had a very beautiful week of trading, of course. Now, in terms of where I was, guys, if you didn't get the message at the end of Monday's video, I truly apologize. I was on a business trip from Tuesday to Thursday, so it was really tough for me to film, guys. Usually when I do travel, I don't mind filming these recaps. However, I really had extremely full days, and filming was darn near impossible, so apologies for being absent, but I am back here with you guys today, and we have an action-packed video. So in today's markets, guys, we had a little bit of a pullback, but that was to be expected, right? We've been having pretty much 5, 6, 7 days in a row of upside on the markets, both in the SPY and the QQQs. And today, despite the fact that we got very good PCE inflation data, the markets took it upon themselves to have a little bit of consolidation. But there was still very healthy rotation in the markets overall, and that is going to be a point of focus in today's video. So in today's video, guys, I have a few things to present to you. Number one, of course, is going to be those PCE inflation numbers. We're going to take a brief look at those. Number two, have two company earnings that we missed over the course of the week together, but we will be recapping today. Those will be the big ones, Micron on Wednesday and the Thursday release of Costco yesterday. Going to be very interesting to take a look at those two companies and see where they stand. Thereafter, we're going to go through the usual here in terms of our major market analysis rundown, major technical analysis here on our major market indexes, and thereafter take a look at our big tech names list as well and see whether or not there's still some good opportunities in big tech names. And lastly, guys, of course, I have to give you guys an update to my portfolio. So we'll be recapping a few of the trades that I took over the course of this week and which trades remain in my portfolio position for next week. So a lot to cover in today's video, guys. Happy to be back with you. Let's dive right into it, right? So SPY down about 0.15%, QQQ down about 0.56%. But when I bring up the heat map here, guys, you will see that the rotation in the market was fairly good today. Now, taking a little bit of a breather here, where semiconductor names had a very bullish day after Micron's earnings on the Thursday session, but today pulling back a little bit and really dragging down the technology sector as a whole. Our big tech names were fairly mixed. Your loss leaders, Microsoft and Amazon, were kind of offset by the gains in Tesla, Google, and Apple here. In terms of healthcare had a very decent day, but a few of your larger names in the index were down. Eli Lilly and NVO, Novo Nordisk to be specific. Financials had a very decent day too. The bright spot of the market, guys, once again continues to be the bottom half of the market. Your more defensive named companies, right? Even in your consumer defensive sector as a whole, only Costco pulling back after their earnings, but for the majority of the index here, guys, was fairly good. And we had a little bit of a bump in energy, guys, just because of the geopolitical headlines. Once again, a little bit of turmoil in the Middle East right now, and we know that that does have an impact on oil prices. Whenever there's turmoil in the Middle East, expect oil prices to rise, and that's why you have a lot of energy names coming in the green here today. On the one-day relative performance, guys, let me just do a quick refresh because the page must have vanished on us. So, can we get it? All right, let's go. So one-day relative performance, guys, you can see that most of the sectors in the market were green. To the downside, we did have healthcare, basic materials, and technology, largely due to those semiconductor names. And to the upside, your big performers, energy, utilities, and communication services. So a lot of your defensive sectors, guys, continue to be some of the outperformers in the market as we really try to navigate this landscape between the rate cuts, the recession narratives, and possibly a risk on or risk off mindset for investors right now, right? So very challenging landscape. We continue to take this one day at a time and play the sectors that are most in favor right now, which is what we've been talking about on the channel, right? A lot of my plays that you will see are heavily oriented towards financials, healthcare, XLP, which is consumer defensives, and a little bit of utilities and real estate in the mix too. Kind of being very selective in the names that I play in the QQQs and also your semiconductor names, just because technology, even though they have rallied a decent amount in the last 2 weeks, they're still somewhat out of favor in terms of more favoring the defensive rotation narrative that's going on right now, right? So before we get into more technicals, guys, let's jump into one piece of data, and that is going to have to be the PCE numbers that came out today. I would do a little piece on the GDP numbers, the Q2 GDP numbers that came out yesterday on Thursday, but we already got those, guys. This is pretty much the second revision for your Q2 GDP. We were not expecting any changes. It came in at 3%, which is exactly what we were expecting. It was a revision, and now this is the finalized number, so no surprise there. healthy GDP as a whole. And on the Friday session here today, we did get some very beautiful PCE numbers that were kind of leaked by Jerome Powell last week. So I wasn't too surprised with the number. If anything, it just confirms to us that the Federal Reserve does get the data before everybody else. Jerome Powell said that PCE for August was coming in at 2.2%. He said this last Wednesday, guys, right? And the release is now 1.5 weeks later. So Jerome Powell was pretty much on the dot there with his prediction at 2.2%. So coming in under the consensus of 2.3. Month over month was also a very beautiful read, 0.2 as opposed to the consensus of 0.4. So all in all, guys, very, very healthy in terms of inflation, but we know that inflation is no longer a problem on a moving forward basis. Have prices come up significantly in the last 2 to 3 years? Yes, but the crux of the argument right here is preventing them from exponentially moving higher in the future, right? Is the path of inflation sustainably under control? I bring up this example a lot of times, right? So what happened 2021, 2022? Prices were before that, prices were moving like this, steady 2% inflation. And then whoops, we had a lot of products such as bread, eggs, meat, and different various grocery items, and also personal consumption items, right? That really started skyrocketing. A lot of them have been up 30, 40, even 50% over the past 2 years. And that was your big spike in price inflation. Now what we're measuring is the inflation going forward. Is it continuing to do this, or is it leveling out back to a normal pace? And this is the normal pace that we're back onto. It's going to be excessively difficult, guys, to erase all of the price increases that we've been having in groceries and other household items without going through a long, drawn-out recession, right? If you want to erase these prices, essentially what you're asking for, you are asking for deflation, and heavy deflation at that. And that only happens, guys, when demand goes to a standstill and when demand actually becomes negative, when people literally run out of money and just stop buying almost everything, right? Then producers and stores are forced to liquidate their prices to the downside, and that is when you're really going to get a price crush. But a recession is never very fun for anybody, guys. Be careful what you ask for if you're wishing for these pricing curves to completely revert, right? That would be extremely, extremely bad. A lot of people would be losing their jobs, guys, and usually we don't see a price reversion after such a heavy increase. We usually do not see this. Can it come down ever so slightly and then resume trend? Yes, that is, as a matter of fact, what is exactly happening right now. A lot of goods have been in deflationary territory for the last 3 to 6 months, but do not expect a complete reversion of the prices, guys. It's not going to happen without a very deep form recession. And if a deep form recession happens, guys, we're going to have a lot bigger problems than those items right there, right? You're going to talk about massive, massive job loss and basically an economy that is stalling or even declining. And nobody wants that, because even if the Fed turns the money printer back on and puts rates back to 1% or 0, it takes a lot of time to get out of that type of drawdown, guys, right? So we don't want that. Unfortunately, the prices that we saw prior to the pandemic are probably never coming back. The issue here is at least they are not exponentially growing forward in the future. I'll remind you, in terms of personal income, right? Personal income growth has been above the rate of inflation for the past 1 year. So we are progressively gaining back the buying power, but I know that you don't feel it just yet. And that's completely normal, guys. It's going to take a while, probably years, before we feel as rich dollar for dollar as we did in 2020 and even prior. So that's my little tidbit on inflation. But as a whole, guys, the direction of inflation is moving in the right direction right now. As you can see, the lowest level since we've had before 2021, and right on top of the Fed's target of maintaining a 2% increase year over year moving forward. So here's what one analyst had to say: all quiet on the inflation front. Add today's PCE price index to the list of economic data landing in a sweet spot. Inflation continues to keep its head down, and while economic growth may be slowing, there's no indication that it's falling off a cliff. And this is what I've been saying on the channel now, guys, for the past 2-3 months, since we've been getting these economic concerns and these job loss concerns as well, right? Yes, the economy is slowing down. It is completely normal. Keep interest rates at the highest they've been in the last 25 years for over a year and a half at that point, and you're bound to put some pressure on the economy. You're bound to put pressure on the consumers and also on companies alike, which prevents companies from hiring more. If anything, they have to actually start laying people off and run a leaner business. So we know that these pressures are in the economy right now. But as this analyst said, and as we've been saying on the channel for the past 2 months, they're not falling off a cliff. So are there a few red flags here and there? Yes, but is everything, is there a massive worry right now for a deep form recession? Well, the data so far points to no. So we'll keep an eye on this, of course, guys, but that is just what I had to say on the whole inflation situation right now. So now that that's out of the way, let's jump right into our company earnings. We're going to start off with a banger. We're going to be covering Micron. So Micron has been the story of the week in semiconductors, of course, after their massive rally after their earnings, right? The company at one point on the Thursday open was up almost 20%. Massive gain and really coming through one of our big resistance levels here, which has been kind of plaguing Micron for the last roughly 4 or 5 months at this point, right? So massive beat. What exactly happened with the company? Glorious beat on EPS on the bottom line by about 6%, and a very nice beat on revenue as well, 1.35. Most of the bullishness, however, came from the company's forward guidance. And Micron usually always reports first before a lot of other semiconductor names, and they kind of set the tone for what to expect in the current quarter. So a lot of people were watching, and that's why it kind of reinvigorated the semiconductor industry as a whole. So Micron shares surge after upbeat first quarter forecast due to AI demand for memory chips. Now let's move into the article, shall we? So the memory maker forecast higher than expected first quarter revenue due to the thirst for its memory chips used in artificial intelligence computing. Micron is one of only 3 providers of high bandwidth memory HBM chips, along with South Korea's SK Hynix and Samsung, which has allowed the US firm to cash in on demand for semiconductors that help power generative AI technology. Now, HBM is a space-saving, power-efficient type of dynamic random access memory chip, or DRAM, crucial for AI-focused graphics processing units that aid in processing vast amounts of data. They are the memory chips that NVIDIA uses, not only NVIDIA, of course, but a lot of other producers of GPUs, of course, right, and CPUs, but for that matter. Demand from data center customers continues to be strong and customer inventory levels are healthy, said the Micron CEO. The company said in June its HBM chips used in the AI processors designed by Wall Street darling NVIDIA were sold out for the 2024 and 2025 calendar years with pricing already determined. Yes, when you are only one of 3 manufacturers of this type of memory chips, right? Well, obviously you have a great deal of pricing power, don't you? So Micron saying that their demand for 2024 and 2025 is through the roof and that they're entirely sold out on their production definitely was well received by Wall Street. Which other companies have said this as well, that their demand and all of their units were sold out through 2025? Well, NVIDIA has said this, TSMC has said this, and ASML has said this as well. So it's very curious, right? All of your market leaders in their respective niches of the semiconductor market have said that demand is pretty much peaking and that the supply is sold out through the end of 2025. So no growth slowdown for semiconductors just yet, which is why I say a lot of the downturn that the semiconductor industry has been having over the last 1 to 2 months is just a good tactical sell-off right now, guys. It's a cyclical business, right? It's normal. After having rallied for 12, 13, 14 months, they take 2 months off. And then as you can see, 2025 should be very good for most of these companies. So let's continue. Micron expects to report record revenue of about $8.7 billion, plus or minus $200 million in the first quarter, and forecast a jump in gross margin to about 39.5% for the same period. Analysts had expected revenue of $8.28 billion, so beating their guys by a very healthy about 7% on their guidance on the revenue. Now, and they also beat on the gross margin percentage here by almost 2 full percentage points. The analysts were expecting 37.7, and they brought in 39.5 for their guidance. Very good. The AI boom has also helped Micron cushion the hit from a memory chip inventory glut in PC and smartphone markets. This was one of the reasons, guys, that Micron took a very, very heavy hit in 2022. If my chart would be so kind as to refresh right now, perfect. So this slump right here from Micron was due to the PC and smartphone slowdown before they found new verticals in this new AI ramp, right? So nice to see that one aspect of their business is making up for the slowdown in the PC and smartphone market business. But even these two guys are rounding the corner of cyclicality and should be quite good in 2025. Personal computers infused with AI are expected to have more memory chips, helping firms such as Micron. AI PCs may have over 30% more DRAM, and Microsoft's push to have users shifting to Windows 11 from an older version may expand the market, especially for commercial PCs in 2025. Microsoft are not the only ones. We know that also Apple too will be including a lot of AI functionalities in their own laptops and different PC options that they have. So expect, whoa, my chair kind of came undone on me there, guys. My bad for that. So they should be having a fairly good time as a whole, guys, right? In terms of that, should be very, very good business for Micron as a whole. Now, one of the things that Micron has been doing as well, guys, one of the reasons that their share price has been challenging, to say the least, was also the fact that they're spending a lot of money on CapEx for their new factories. This is directly from their website right here. So they're building two massive factories in the US, one in Boise, Idaho for about $15 billion. That is this factory right here for Micron. They are getting about $6.1 billion from the CHIPS and Science Act from the US government to fund the construction of that factory. But Micron right now is building about 4 factories worldwide. The biggest 2 are definitely in the US. And as you can see right here, Micron plans to invest approximately $50 billion in CapEx through 2030 to expand their production capacity. So unfortunately, no more free cash flow for this company. Is all going to new factories to increase that production, guys, which is going to give them an excessive ramp in revenue. Now, so as I outlined right here, this company was affected by the smartphone and PC slowdown in 2022. China firms were banned from buying as well, the huge capex for new factories, and all of this crushed Micron's profits. But now we are rounding the curve, guys. Now is when we want to be keen on possibly opening some positions on Micron, which is why I opened mine all the way down here with some juicy leaps that are now up in a fairly significant fashion. So as a whole, guys, they are regaining positive EPS, regaining positive net margins as we come out of these factors right here. No more free cash flow. It's all going to CapEx. The debt level is okay. As you can see right here, let me just pull it up. In terms of the debt level for Micron, let's just do this really quickly. So you can see right here, the debt level, not too bad, right? They still have a decent amount of cash on the balance sheet right now, $7 billion. But as you can see, there is no middle column. That is your free cash flow. All of the free cash flow is being spent to the construction of those new factories. Now, in terms of the growth here, guys, look at this growth. Beautiful EPS recapture back to positivity after those 2 negative years that we just talked about, right? 2023 and 2024, the transition year. They just wrapped up their fiscal year as a whole. So now we move into 2025, 2026, beautiful EPS expansion. And look at this revenue jump, 2025 and 2026, 2025 and 26 onwards. Going to be very good for the company. Give me a quick second, guys. What is happening today? The chair's going off on me. The voice is going off on me. Terrible return to the YouTube channel, right? Anyways, moving on forward, guys. In terms of the valuation, is Micron a decent buy right here at 107? Considering the fact that they're now starting into their new expansion verticals. Let's have a look. Revenue growth of 25% per year through 2026. EPS expansion of 33%. Now, Wall Street is actually projecting over 40%, 41% to be exact. But I gave them the benefit of, I took away 20% of that. I put my EPS growth at 33%, gave myself a 20% margin of error in the event that the growth estimates are potentially overestimated, right? Now, given all those factors at 107, it gives them a forward PE for 2025 of 11.90. This is why, guys, you should never look at the trailing PE ratio. Trailing PE ratio right now is 141, right? Never look at the trailing. Always look at the forward PE ratio, guys. Right? You can see why was the PE ratio on the trailing basis so high? Well, because they only made $1 in EPS this year. But next year, it'll be approximately $9. So if you look at the trailing PE ratio, you might say, oh, Micron's overvalued. Not at all. It's actually very, very cheap right now on a forward basis, 11.9 PE. And when we divide this by their EPS growth, which is fantastic, we get a PEG ratio of 0.36. That is dirt cheap, guys. Anything under 1 is good. Between 1 and 2 is okay. Over 2 is highly expensive. 0.36 is a no-brainer for this company. So for myself, guys, I like Micron, which is why I put on the play that I did all the way back here in the roughly mid $90. Well, sorry, no, actually we picked the bottoms pretty much, $88, $87. But even right here, guys, technical, we're looking for the breakout of this big range of resistance that we now broke through. Breakout, possibly retest. A lot of your longer term moving averages are sitting right there too. 200 is this green line right here, 200 EMA, and the 50 is the pink line right there. So any retest of the lower $100 levels, guys, this should be a decent buying opportunity for this company, especially if you're looking to, especially if your investment thesis rather is for their 2025 and 2026 factory production expansion. So Micron looking very good. The fundamentals are cheap. The price action is also looking quite good in terms of some future expansion for the company right here. So no red flags at all. The bulls are actually trying to reset into a possible new weekly uptrend leading into the tail end of the year. So that is my analysis on Micron. Hopefully you guys appreciated that one. Now let's jump into company number 2, which is why, I don't know why this is so slow right now. I don't really have that much open right now. Very, very strange. Terrible return to the YouTube channel, right? My bad, guys. So company number 2 is going to be Costco. Let's have a look at Costco right now. So in terms of Costco, Costco is actually slightly, ever so slightly down on the day by about 1.75% after their earnings coming in after the bell yesterday. Let's take a look at their earnings, guys. 4.11% beat on their bottom line EPS, which is fantastic, and an ever so tiny miss on the revenue by about 0.27%, which is nothing. So as a matter of fact, guys, just because of that tiny little revenue miss and because their guidance is not extremely outstanding, right? Not beating the bar by such a wide margin. That's probably why Costco is not green on the day today, but there's absolutely no red flags, guys. The reason that I love Costco's earnings cycles, you'll notice that they never really move much after earnings. Why? Because it's such a consistent and predictable business model, guys. We're not looking for anything fancy. It's not as if Costco can mention AI on an earnings call 5,000 times and change the direction of their business, right? It's a very stable business model with very loyal customers, which is why most of everybody who invests in this stock loves to be invested in it. You really don't get any nasty surprises with Costco. If anything, you just continue to get bullish surprises to the upside. So moving into the article. So Costco Q4 earnings beat estimates, even though the revenues miss. Let's have a look right here. Comparable sales also increased, though the pace of growth moderated compared to the preceding quarter. This can be attributed to the cautious consumer spending environment and lower gasoline prices. The cautious consumer spending environment, however, did not affect their metrics that much. And let's continue. I'll show you guys, right? Costco's comparable sales rose 5.4% year over year in the quarter, a deceleration from the 6.6% increase recorded in the preceding quarter. So slightly decline in growth right there, but 5.4% in this economy, in this market environment where so many other retailers, so many other consumer discretionary brands are being challenged for same store sales, guys. Above 5%, you guys know, right? I've always told you anything between 5 to 7% is top tier same store sales growth. So Costco at 5.4, that is very, very good. Comparable sales in the United States grew 5.3. Canada and international markets saw increases of 5.5 and 5.7% respectively. Moving on down. By prioritizing value and quality, the company has built strong customer loyalty, leading to an impressive membership renewal rate of 90.5% in the quarter. Extremely loyal customers, guys. Now, moving on forward, Costco achieves membership growth and improved margins. Let's continue. The company ended the period with 76.2 million paid household members, up 7.3% from the prior year. The number of total cardholders grew 7% to reach 136.8 million. Absolutely amazing. Now, moving on forward, traffic. The reason that these numbers differ, of course, is because, well, often per household, you can have 2 different cardholders, right? But for one single membership price. Moving forward, traffic or shopping frequency improved by 6.4% globally and 5.6% in the United States. Definitely not a sign of slowdown at Costco, is it? While the average transaction or ticket decreased by 0.9% worldwide and 0.3% in the United States. These kind of offset each other, right? Even though people are spending less money every time they go to Costco, but barely, right? Average ticket down by not even 1% worldwide and only 0.3% in the United States. barely any pullback on a per user basis in terms of average ticket. This growth here, shopping frequency, largely makes up for that. Now, comparable sales, excluding gasoline prices and foreign exchange, rose 6.9%. In the United States, comparable sales increased 6.3%. In Canada and other international markets saw gains of 7.9 and 9.3 international. That is absolutely outstanding for Costco. Costco's e-commerce platform was strong, comparable sales rising 18.9% year over year, or 19.5% after excluding impact of gasoline and currency. Now, gross margin, here's another one. Gross margin expanded 40 basis points year over year to 11%, exceeding the analyst estimates of 20 basis points. So 2 times the analyst estimates. Operating income grew 9.4%, and the operating margin improved by 30 basis points to 3.8%, better than the analyst expectations of 20 basis point expansion. Costco store updates and expansion plan during 2024, the company achieved its target of 30 new warehouse openings. That's about how much they target on a yearly basis, guys. Costco is very, very careful with the location selection that they choose to expand into, and they usually open about 30 to 35 stores per year at the most. For fiscal 2025, it plans to open 29 warehouses. So that's pretty much everything in terms of the article, guys. Very boring, but there's one more thing. There is one more thing that is noteworthy too. Costco, effective September 1st, obviously increased their membership fees. You might have seen that in the news if you follow a company or if you're a member of Costco, such as myself. So as you can see right here, Gold Star from 60, well, Gold Star Business and Business Add-on from $60 to $65 here, guys. That's about an 8.3% increase. So should do a very good job at increasing their bottom line profit margins there. And the executive membership from $120 to $130, also an 8.3% increase right there. Executive, however, this is very good. They increased the 2% rewards cap from $1,000 per year to $1,250 per year as a whole. Very, very nice of them to do that, guys. It largely offsets any price increase on that executive membership. Once again, Costco's members, guys, are, for the most part, some of your higher tier middle class income or higher income individuals. So Costco is one of your more resilient retailers in the face of any recessionary concerns. Really, Costco and Walmart, guys, even though they're slightly different, right? Costco caters to a more higher income demographic. Walmart does a great job of scooping up not only middle class and higher above, but they scoop up really all of your lower income demographic as well. Those two are really the top tier players. My pick is Costco just because of the brand loyalty as a whole, the membership renewal rates, and just the membership features as a whole. I think that Costco does the best job of anybody, guys, of providing the best quality products for the best value, right? Quality of their products is second to none, in my opinion, for the price that they offer on those items, right? So one must argue right now, with the share price so high and the valuation so high as well. Look at these valuation metrics, right? So revenue growth is about 6.1% per year. Their EPS growth is about 9.8% per year. Now look at these numbers for valuation, right? Their forward PE at 885, and this is not because they're not growing. Let's take a look at their growth, right? So their growth is very good. EPS, look at this consistency. Consistent EPS growth, consistent revenue growth, boring. This company is so boring, which is why I love it so much. It just executes on the business model flawlessly, right? So look at these valuations though. At $885, your forward PE for 2025 is almost a 50. And when we divide that by, to get their PEG ratio, when we divide that by their EPS expansion per year, we get a PEG ratio of 5.06. But Will, you say that anything above 2 is expensive. And you're right, this is very expensive, either on a straight PE ratio number or on a PEG ratio basis, right? The company's long-term average for PE is about a 35, 37. So they're still above their average right now. The free cash flow yield. Sometimes I use the free cash flow yield when the EPS expansion is not above 10% because the company's not a growth company, right? It's just a maintain and deliver shareholder value company at this point. Free cash flow yield, you'd want to see this one between 2.5% to 5%. The closer to 5%, the better. The higher this number, the better. At 1.7, it doesn't even meet our minimum threshold of 2.5. So low free cash flow yield and extremely high valuation. Why would anybody buy this stock? Well, let's get into it. So Costco's earnings aren't an issue for Wall Street. Why Wall Street still likes the pricey stock? I've highlighted a few things from some of our analysts right here. There is a scarcity of high quality retail names with unit growth and share gains. This is true. Costco is so much more resilient than I can name you so many other brands in the market right now, consumer discretionary brands that are struggling right now, guys, in this current macroeconomic environment. Moving on further, what does another analyst have to say, this time from BMO? For instance, after earnings, he thinks the stock's valuation isn't too big and bulky. He says that the company deserves the premium valuation. Costco is a consistently strong performer with a business model that helps drive long-term sales growth and high returns on invested capital. He got it. The high returns on invested capital and high returns on capital employed. Costco excels in both those metrics, above 15% per year. Those are the most highly correlated with a stock's compound annual growth rate over time. If you have return on invested capital and return on capital employed numbers above 15%, usually your stock price over a long run will go up about 15% per year. This one will beat the S&P 500 most years, guys, and on a long sample size, 10 to 20 years, they will beat the S&P 500 all the time. UBS analyst Michael Lasser agrees. Here's another one. Costco's premium multiple is due in part to its continued market share gains and steady core margin increases. Moving on further, given how loyal Costco customers are, sometimes bordering on fanatical, Barron's doubted they would. For shareholders, that is the beauty of Costco and one reason for such a high valuation. The customer loyalty, how much people love this brand, and that's why I love this stock as well, guys. It may have a very high valuation, but it deserves it. That is why Wall Street gives it the high valuation, because it is consistent, it is predictable, they execute on their model, and they have very high brand loyalty, guys. And that is why this stock just continues and continues and continues, moving higher on the longer term timeframes. It is just a growth machine at this point in terms of share price. Can it sometimes consolidate and move sideways as it grows into the new valuation? Yes, and possibly we're approaching that time right now. Can Costco potentially consolidate sideways for a few months as it grows into this new valuation? Possibly, yes. But this would be a beautiful, beautiful, beautiful opportunity to pick up some extra Costco shares for the long term, even at these higher levels, guys. I love this stock. 850 down to 750. This whole area right here is a definite buy for me for any long-term portfolio. Despite the heightened valuations, guys, it will continue to outperform the S&P 500, in my humble opinion, over long term, which is why it still remains one of my favorite companies in the entire stock market right now. So that's everything for our earnings and the inflation recap. Hopefully you guys enjoyed that. Spent a little bit more time on them just because we didn't have time together this week, of course. So now let's dive into everything right now, and we'll get into the technical analysis, shall we? So not much has changed, guys. So in terms of the SPY, we know that we're cracking to new all-time highs, and we know that the bulls also control this daily uptrend very beautifully right now. The daily higher lows are set 565, so any move lower is just going to be looking for a higher low for possible further daily trend expansion. Where could we be targeting, guys? Possibly the touch of the 12 EMA. We have not touched the 12 EMA in some time right now. So take a look right here, 566, 567. How do you know that this move expansion is done? Well, just take a look at the hourly timeframes here, guys, right? Need to hone in on these hourly timeframes. So in terms of what we're looking for, watch for the loss of the hourly. If you lose these lows and set up for the lower lows, loss of the hourly, loss of the 12 EMA in a significant fashion, that is when you will know that your daily consolidation is going to be underway as a whole. Let me just maybe close out some tabs here, guys. My apologies for this. I don't know why. It's being very finicky with me today. So moving on in. So that is what we're looking for on the SPY. But all in all, guys, right now, the bulls are in absolute full control. There's really nothing bad to say about this chart at all, right? Weekly uptrend. So you should know that if we do get some daily pullbacks, just looking for a weekly higher low as well. Anything at that point above 539, looking for the weekly higher low for possible expansion. If we do start pulling back more heavily on the daily, target this line right here, 565. As I said, prior all-time highs should be acting as good support. Now let's move on to the QQQs, shall we? So moving into the QQQs, down about 0.56% today, but we know the QQQs were due for a little bit of a break. It's been a very beautiful rally in the past, so let's have a look. Daily uptrend confirmed, looking for a possible daily higher low right now for possible daily trend expansion. The daily higher lows are right here, 478.30. So keep an eye on this line right there. And how do you know that this daily move is topped out right now? Well, you can see it on the course of the day today. Take a look at the hourly time frame on this chart, guys. Potentially losing the hourly, right? We are barely flushing the lows in the last hour of trading right there. almost losing them, losing the 12 EMA as well. So on the Monday session, if we crack these lows right here like this, you need to know that the daily move higher is pretty much done and that we're possibly into furtherance of the daily consolidation, and keep a close watch on that low right there. If for some reason we break it or set up for the daily downtrend, something like that, just to understand what we're looking for here, guys, on the higher time frames, we will be looking for a weekly higher low for possible further trend continuation. This is a beautiful weekly uptrend right now. Could be back testing this whole tightening wedge, and the 12 EMA on the weekly sitting right there at about 473. So that's the level that I'd pay special attention to on the QQQs. Now, moving into financials. So while the QQQs were kind of moving higher, financials were kind of consolidating a little bit, right? So decent consolidation on financials right now. We know that they had a daily downtrend, big engulfing move. The bulls looking to set the higher low and go for the trend change. That's what we're looking out for right now. So keep an eye on these two levels right now, guys, 44.68 and obviously the above. We are looking for the daily trend expansion. However, if we fail and roll over and crack this right here, 44.67, daily downtrend is underway. And then unfortunately, we will be in for further weekly consolidation on these charts. As a whole, guys, not looking too bad though. Weekly uptrend is gorgeous right now. We'd just be looking for a little bit of tightening up right here of this range. We have a lot of space, anything above 43.50, just looking for a weekly higher low for possible further trend continuation. Looks like it kind of wants to bull flag here on the weekly at the tops, and then maybe go for the breakout as we get closer to those bank earnings, right? Which are going to be coming up in about 2 weeks time. All in all, though, no red flags on financials just yet. Just keep a close watch on the rotation. You'll notice this, guys. What QQQ, XLF, and XLV have been moving opposite in at least the last 2 weeks of time. Whenever these two are green, usually QQQ is red, and the opposite has been true as well. When QQQ goes on a little bit of a rally, you can see some pullbacks on financials and healthcare. Pay special attention to this rotation here, guys. These are the most three important sectors of the market right now, just because of the weight that they represent in the indexes as a whole, right? So moving on further, let's jump right into it. So XLV right now, XLV has been really getting beat down over the past 2 weeks of trading. Really not many companies in healthcare have been spared, but it does represent a very good buying opportunity in my opinion. So we can see what happened right here, right? They had the daily uptrend and then unfortunately they lost it. So now daily downtrend is underway. So at this point, just probably looking for a higher low, lower high, and then moving into possibly lower low territory, culminating in a retest of this big area of support. That was your prior all-time highs back in the month of early August. So if you were to retest these to the downside, I would not be surprised if the bulls start putting up a heck of a big fight down there. All in all, healthcare is not looking too bad. Why do I say they're not looking too bad, guys? Well, it has to do with the weekly timeframes. So the weekly timeframes are still looking very, very decent right now, even though we are in pullback territory, looking for some equal lows right now. Even though we cut them ever so slightly, they're coming into the moving averages ever so perfectly. Weekly was in a good little uptrend right now. We are on the verge. If next week is red, guys, that will be a confirmed weekly downtrend. At this point, it is so tight. It's not the clearest point in time right now, especially with that weekly close. So for now, they're upholding the 12 EMA, but if you really pull down into this support area next week, that will be a confirmed weekly downtrend. Why it's not that much of a problem, in my humble opinion, though, is look at this monthly chart, guys. Beautiful monthly uptrend. We are going to be looking for the monthly higher low for potential monthly trend continuation, guys. Healthcare is a defensive sector, usually performs very well when we start talking about recession narratives. So I'm really not too nervous about this index as a whole. If anything, it's going to open up a bunch of buying opportunities. And here are some of the ones that I would like to maybe get into myself over the next maybe 2-3 weeks. If healthcare continues to consolidate, I'll be looking for opportunities on the following names. UNH in the 550 range. I would love this one for the infamous breakout, retest the range, and possibly run a little bit further. I like that one. Another name that's on my radar right now is also Johnson & Johnson. So let it pull up right now. Johnson & Johnson coming into the backtest area, as a matter of fact, right now, could be good for some possible weekly trend expansion as healthcare resumes its upward trajectory. Those are just a few of the names. There's many, many more, but I'll keep it to 2 right now just for purpose of keeping this video a little bit shorter. We'll get into a lot more of these plays on the Monday video when we don't really have any earnings to cover or anything like that, right? So now moving into the SMH index right now. So SMH as a whole, as we were kind of predicting, right? If we were to get confirmation of this daily uptrend and potentially move higher Where's the next area of resistance, guys? Well, we're smashing into it right now. 248 up to about 257, and we kind of got rejected. So at this point in time, looking for the daily higher lows. At this point, anything above 235, looking for the daily higher lows for possibly a second attempt at trying to smash this resistance area. So even though the bulls have been weak in the past couple of days, it's fine, guys. They do still control the daily uptrend in a decent little fashion right here. In terms of the weekly as well, the weekly is not looking too bad, but I will be very selective on the names that I choose to play in semiconductors. We'll talk about that more when we go through our big tech names, such as AMD and NVIDIA, right? So you can see the weekly candle close, once again, getting rejected here, guys. So they tried to go for the beautiful weekly close into this area, trying to confirm the weekly uptrend, but so far, all we have pretty much at this point is a double top. Reiterates what I was saying for the past couple of weeks of time, right? The best case scenario for the bulls right now may just be a tightening range prior to all the semiconductor earnings that are coming out in the month of October. I'm pretty confident in saying we may just be in for somewhat of a tightening range here for the next maybe 2, even 3 weeks, perhaps, as we deal with a lot of rotation in the markets from kind of your growth sectors to back to the defensive sectors, kind of some back and forth, back and forth. This one cannot really have, or hasn't been able to really manifest the types of sustained rallies that we've really been having or that we've been used to for a while now, right? Kind of trapped in this range right here. So if we do start tapering back down, we'll be looking for the weekly higher low, anything above 214. Want to keep this in a tightening range and not crack these lows down here, guys. So I'll be very picky, but any weakness in semiconductors, guys, I will be looking to play using short puts, of course, my preferred strategy for any sector that is currently having a lot of volatility. Moving into the Russell right now, give me another brief second. So moving into the Russell, so 0.68% to the upside, not looking too bad at all. So the Russell, really trapped at these higher levels, right? We were unable to breach, and that's what we were kind of saying in Monday's video. So as of now, they were looking for the daily higher lows. Daily higher lows are now set, and now the bulls have one thing to do. Either we can break up higher, break this 225 level, and really start attacking the highs of 2020 and 2021, which are going to be all the way up here in the higher 230s, right? But for that, we would really need a very bullish macro environment, guys. You would basically have to dispel any recessionary fears whatsoever, and only then will the Russell be permitted to really expand through levels as everybody is kind of wanting this trade to do. But as we've been saying in the past few weeks on the channel, guys, I would not be surprised if, there's this battle right now. Hard landing, soft landing, recession, no recession, right? Red flags in the economy, no red flags in the economy. While we still have these debates at hand right now, it is very hard for the most risk-on index in the entire market to start gaining the levels as if we are in a blue sky breakout narrative right now, as if we're in a fully risk-on environment. We don't really have the green light clearance for that just yet, so it may just be a case in point for the tightening up of this range even possibly more. And you can even see that on the daily, right? Getting rejected here at the highs of the day. They tried to push and unfortunately had to give it all back. So in the event we crack last Wednesday's low, or this Wednesday's low rather, 217.40, daily downtrend will be confirmed. And then we're going to do the exact same thing I was talking about, guys. Probably go for the tightening up of the range on the Russell right now. You wouldn't want to see them crack these lows, but if we can kind of tighten up, come back down into the mid-teens right here, like 213, 214, that'll provide us maybe a decent little entry opportunity for some possible swing trades if you're looking to play this tightening range. Now, moving into the Dow Jones lastly. So the Dow Jones has to be one of your biggest winners so far. I mean, it is one of your more defensive indexes, so I'm really not too surprised about that. So beautiful daily uptrend on the Dow Jones right now. Another all-time high for the index today. Higher low is right here, 41,800-ish. In the event we were to lose these into next week and set up for the daily downtrend here, guys, that would not be a big deal either because we control the weekly time frame in such a beautiful fashion. Glorious weekly uptrend. So any daily downtrend weakness, short-term weakness, would have to be for a weekly higher low for possible further weekly trend continuation, right? Where will we be targeting for a potential pullback here if the markets pull back over the next week or so? Well, 41,300 down to about 41,000. That is the pocket of confluence, plus the 12 EMA is right there. Something like this, breakout of the range, retest of the all-time highs, and then possibly run for the Dow Jones. So the bulls remain in full control of that index right here, looking quite good if I do say so myself. Now we're going to move on to Bitcoin. I'll only be covering Bitcoin to try to save some time. You know that everything moves with Bitcoin here, guys. So Bitcoin is going to be your guide in terms of cryptos. So whatever I say for Bitcoin, probably going to stand for the rest of cryptos in terms of the price action, right? Just keep an eye on Bitcoin's price action, and you should have some good indications for Ethereum, Solana, or whatever you're trading right there. So beautiful daily uptrend, as we know. Higher lows are set right now. This whole area, 62,300. So as soon as this move is topped out, how do you know that a move is topped out, guys? Well, I'm glad you asked. We go through this a lot, but is a loss of the hourly time frame and a loss of the 12 EMA in a significant fashion. If that happens, guys, you can expect your daily consolidation to be underway. And at that point, we will just be looking for a higher low, anything above 62,000, this whole level right here, right? 62,004, 62,005, going to be looking for a daily higher low for possible further trend continuation. And where's the next area of resistance at this point, guys? Has to be that 68.5 level that we got rejected at a couple times prior. So looking maybe for a back test of the higher end of this range right here, 64,250-ish could be a nice little breakout, retest, and run trade for Bitcoin. As a matter of fact, that may be one of the opportunities that I'm looking to take as soon as next week. All in all, though, on Bitcoin, looking very, very, very good for some bullish momentum continuation. And couple that with the weekly, guys. Look at this weekly. Finally, we get a weekly engulfing move. It's been a while, guys, since March. We have not had a weekly engulfing move. We've had a decent move like this, and then they gave it all back. Decent move, but this is not engulfing. This is 80% retracement and then back down. Once again, no engulfing move right here, back down. Finally, this most recent leg of selling completely engulfed. This gives the bulls the best chance that even if we were to lose the daily and start consolidating a little bit, looking for the weekly higher low for possible weekly trend continuation. Area of confluence, guys, that infamous, 61,000 where your moving averages are as well, the short-term moving averages, a little bit of confluence right there, breakout, retest. This could also be viewed as a slight cup and handle for a potential weekly uptrend recapture. We have not had a confirmed weekly uptrend on Bitcoin since February and March. It's been a long time coming, guys. So I would keep a very close watch on this one and look at your MACD on the weekly, guys. MACD looks like it wants to go for it. So Bitcoin, if Bitcoin starts breaking higher, guys, this is going to be possibly a signal for a short-term risk-on asset rally. But keep in mind, a risk-on asset rally can be undone very quickly with any negative macro data. So keep that in mind, guys. Play it while it's hot, right? Strike the iron while it's hot, but be mindful, be very mindful that that bull run can come to an end very, very quickly in either case scenario if we get bad data, right? Whoops. So moving into our big tech names, shall we? So moving into Apple right now. So Apple up about 0.12% on the day. Apple's really been struggling in this overhead area of resistance, right? Let me just extend that right there. So you can see why it's been such a problem for Apple, right? Very, very, very big area of resistance here, close to the all-time highs. But we know that that's for a few reasons. It's very, very tough for Apple to run right now. They're at a very rich valuation. They do have some revenue growth concerns. And the iPhone 16 upgrade cycle right now is not really going according to analysts or company plans. It's a little bit slower than the iPhone 15 upgrade cycle. And as a whole, doesn't point to any extreme bullishness in the near-term future for Apple as a whole, right? That being said, we are looking for the daily uptrend confirmation. Keep that in mind. If we do get a break of 233, daily uptrend will be confirmed, and then we will be on the way to the all-time highs despite Apple's struggles right now. Just goes to show how resilient of a company it is right now in these markets. It is one of your Wall Street darlings, as they say, but I have my reservations with this stock right now. Full disclaimer, I own it in my long-term portfolio, but I'm not adding it up here, and I'm not even interested in taking many swing trades. I don't believe that the risk reward is worth it for this company right now. So not quite through the resistance area right now. And if we break to the downside, 224, break this, daily downtrend is once again underway. And it'll kind of undo a little bit of progress that's been done so far in trying to reestablish this weekly uptrend, right? So far, we have not been able to really get an established weekly uptrend out of Apple. For that, you really need a break of this 233. Break and close above the 233, we can talk about weekly trend expansion into the all-time highs. But for now, still in a little bit of consolidation mode. Even if we tighten up this range here on Apple, it would not be the worst thing. If anything, if you put a gun to my head or something like that, guys, you told me, find a trade on Apple and trade Apple, I'd have to be looking for a swing trade at the lower levels right here, 217 to about 215 for a little bit of a swing long, just using this whole support area as kind of our last area of defense, looking for a little bit of reversion to the upside, right? So that's it for Apple. I'm not playing it for right now. For me right now, it is just a hold. It's not a buy, it's not a sell, it's just a hold. And I've been saying that, guys, for pretty much the past 3, 4, 5, 6 weeks at this point, right? Moving into AMD right now. Now, this is one that has broken a significant level and we have to talk about it. So look at this, guys. This was the infamous resistance zone for AMD, right? I've been talking about it for a long time too. 163 down to about 153 was that area. And now we have significantly blasted through it. Gorgeous daily uptrend underway right now. So possibly an opportunity for the infamous breakout and retest of the range, right? Looking very good. So any move lower right now, looking for the higher low. Anything above pretty much 148, looking for the daily higher low. And now look at this, guys. We are finally above on the daily all of the short-term moving averages in a significant fashion. And they're kind of crossing above now, right? Finally, the moving averages, all the short-term 12, 26, and 50 are now above this green line, which is the 200. That is a very bullish crossing signal right there, guys. And even on the weekly, look at this too, right? This is also very significant for the stock. First confirmed weekly uptrend since this one all the way back in the month of June and early July. So significant move for AMD. Even if we start consolidating more on the daily, guys, just looking for a weekly higher low, anything above 132, looking for that weekly higher low for possible further trend continuation on AMD. So I'm very, very, very interested, guys, in taking a trade on AMD. Any further weakness into this zone, talking about the mid 150s, I'll be looking to play some short puts very, very tight right here at about the lower 150 range, and possibly even targeting some calls or some debit call spreads for that trend expansion. Keep in mind, guys, AMD does have earnings at the end of October, and this is the earnings quarter where they are embarking on their exponential growth because of their data center business. Look at these Q3 earnings estimates for EPS. They're starting their ramp, and the annual ramp after into 2025, 26, 27 is going to be the stuff of legends. Quarterly revenue as well. Here is your revenue ramp. They're starting their data center revenue ramp right now. Look at this revenue expansion, 25, 26, 27, blows the last few years out of the water, guys. So this could possibly be the turning point for AMD, and I am all here to start playing for it, guys. Looking for a retest in this area will provide beautiful confirmation for that swing trade that we've been waiting for a very long time. We played AMD a bunch down in this lower area right here, but this could be the one that we're really waiting for if the market really maintains in this semi-bullish factor right now. I would say the market right now is about 65-35 bullish versus bearish, right? Yes, we have some concerns in terms of the economy and stuff like that, but the semiconductor industry as a whole, as we recap from Micron, from ASML, from NVIDIA, from TSM, through 2025 is going to be crazy, crazy expansion. So now is possibly the time to be building some of these longer term swing trades that we're interested in. And if ever the economy really starts unraveling and they take the semiconductor industry with it as a whole, we can always DCA back into these levels right now. But for now, we're going to be in line with the market, right? Continue to have a bullish lean and continue to be cautiously optimistic. Now let's move into Amazon, shall we? So moving into Amazon right now, down about 1.67%. Not the worst day for Amazon, but just having a little bit of healthy consolidation, right? So we knew they were on a glorious daily uptrend in terms of some bullish expansion right now. Daily higher lows are right here, 183.37. So we broke out of the 190 for Amazon, which was this resistance zone. And now we're kind of re-challenging the end portion of that to the downside, right? So as a whole, Amazon not looking too bad. If anything, keep a close eye on 183. Come too close to it, and you may end up with a scenario where it may just challenge this area to the upside, use it as resistance, right? And then reset into a daily downtrend. That would be fine. Why would it be fine, guys? We're looking for a weekly higher low on Amazon at this point, anything above 168. Weekly higher low for potential weekly trend resumption into their earnings, which are going to be Monday, the 21st of October. So I'm looking, if Amazon does come down there, I'm looking for 180, guys, right? This whole area, retest of this range where we got topped out in this initial leg, right? If we can back test this, call it 183 to 180, this little pocket right there where we have the weekly moving average sitting. That is where I'm going to be looking for my next trade on Amazon. So hopefully that is helpful for all of you looking to position for a swing trade as well. That's this area right here, guys. This one right here, right? Let's call it one. I know it's messy, right? We can kind of move a little support box down there, but this is the one that I'm kind of targeting, right? This whole 183 to 181 area, sweet little pocket right there. Going to be looking to play that based off the weekly time frames, of course. Moving into Google right now. So moving to Google of about 0.89%. Oh my goodness. My computer was doing a massive background update, guys, and it just gave me the completion. And now look, we got the super fast charts up again. Terrible return to YouTube. What can I say? Maybe it's not for me, right? So moving into Google right now, 0.89% to the upside, looking very good on Google, but Google's struggling ever so slightly, guys, with this 165, 166 area of resistance. It's not looking too bad though, right? What have they done so far? They've done a great job, right? Daily downtrend was underway, beautiful engulfing move, and now tightening up. This is a nice daily bull flag at the higher end of the move. I like this move right here. The only thing that could possibly undo this move by Google is a slight downturn in the QQQs. So keep an eye out for that. We know QQQs have been rallying nicely the last 3 weeks. If they consolidate, well, unfortunately, Google will probably lose this little level as well and start consolidation too. So keep that in mind, guys. It's all about the QQQs. In the event the QQQs remain bullish and we don't get that downside break and Google is able to break the 166, you guys know where we're heading. I've talked about it many times in the past. All the way up here, 171 to about 180 is your next big area of resistance. You can see that best on the weekly chart. Challenging area for the bulls in the past. Resistance here as well. That's going to be the next stop. And what is Google looking to accomplish, guys? Looking to kind of undo this weekly uptrend slowly, 1 week at a time, right? So very nice move in terms of percentages off the lows, right? So we have a 78% retracement. It sets up the bulls beautifully to where we can either completely V-shape this and reset into a weekly from here, or possibly if we have a little bit of QQQ weakness, reset weekly higher lows down here and make a second attempt at the 170, 180 level on Google. Very, very interesting company right now. I still love it. Even at these levels right now, guys, I still love it. The valuation, although not at 158 right now, is not far off. I'd say the peg right now is about a 1.2. Super cheap valuation right now. Still decently off the all-time highs as well by about 15%. Gorgeous company, gorgeous fundamentals. Department of Justice lawsuits, in my humble opinion, are a buying opportunity for the company. And I will continue to buy any and all dips on Google in the form of either writing some short puts or maybe even loading up on some further call debit spreads, because I think there's some good risk reward, guys, that Google can really push into this whole 170, 180 area. So that's going to be my next target for this stock. Now, moving into Meta. Meta down about 0.08%. They can afford it though. They really blasted beyond the all-time highs this week. It's been a very good week for Meta. Even though they've been sideways, they've been holding on to the gains very nicely. So looking for the daily higher lows, they were set on the Tuesday session. Daily higher lows, 555. Now, new daily uptrend is of course underway, but it's getting very, very tight, right? Meta does have the opportunity to expand on this daily uptrend a little bit further. If they can keep this move alive, we are definitely heading to the 600 psychological next area of resistance. However, if we were to roll over without making new highs and break below 555, that would be a loss of the daily uptrend. Daily downtrend would be underway. And at that point, that would be fine. Why? Because we'd just be looking for, let me move all this text out of the way and zoom in. At that point, guys, we'd just be looking for some weekly higher lows, right? Beautiful weekly uptrend right now, looking for the weekly higher lows. And look at this weekly MACD, guys. It's been sideways to down since April, all through this consolidation. And now look, the momentum is returning very, very, very bullish. I was saying it for a very long time. Hopefully you guys are able to buy the dips with me down here. Beautiful buying opportunity. If ever we consolidate a little bit, guys, and start retesting this 545, 540 level, breakout, retest, and run is on the table. I will be sitting here with some buy orders for Meta if that is the case. That's the type of swing trade that I'm looking to take. Now, moving on to Microsoft. Microsoft also not looking the worst here today, down 0.76% here, on the verge of the possible daily downtrend, right? That will be a break of the Tuesday lows, a break of 426.30. Daily downtrend will be underway on Microsoft. Not that big of a deal though, guys. Why? Once again, revert to your weeklies. All the time, revert to the weeklies. Microsoft as well. You notice a lot of these similar patterns, right? Not on Google, but Amazon, right? Possibly looking for some weekly consolidation. AMD, possibly looking for some weekly consolidation, right? Meta, possibly looking for some weekly consolidation. Microsoft, possibly looking for some consolidation. And what are they all based off of? QQQ, possibly looking for some weekly consolidation. So do not be surprised if a lot of these charts look similar. It just means that we're going to have opportunities on all of them if that does happen. So you can see getting rejected on the weekly from this infamous zone of resistance that was above us, 435-ish down to about 423. If we break it to the downside, no problem at all. Tons of space, anything above 401. Looking for the weekly higher low for possible trend expansion. I'll be sitting right here, guys, 418. If we can get a revisit of this 418 level, which is roughly this little pocket right about there, I'll be looking to be shopping for some Microsoft, possibly for some call debit spreads with a lot of time on them. I think earnings will be very, very wonderful for them on the 3rd week of October. So that is what I'll be looking for to play Microsoft. As of right now, very healthy consolidation on a lot of these big tech names, guys. Now, moving into Netflix. So Netflix down about 0.57%. Netflix looking absolutely amazing. They have finally broken out. We were talking about this on the Monday video as well, right? Finally breaking out on Tuesday. They really made it happen in a big way. So nice daily uptrend by the bulls right now, looking to set up the daily higher lows, anything pretty much above 689, looking for the daily higher low for possible further trend continuation. This is the breakout retest of the all-time highs, guys. Previous all-time highs were all the way back there. As you can see, we also had the new all-time highs, which are right here. You can see if we focus on the daily, we've broken above these 2 yellow lines, which signal those all-time highs. We've broken out of them. We are now back testing them and possibly due for some further trend continuation. Now, in the event we pull back with the rest of the markets, that is okay. A lot of space on the weekly here, guys. Looking for any pullbacks to be looking for a weekly higher low for possible weekly trend continuation into Netflix earnings, which are going to be Thursday, October 17th. I do believe they should be very bullish for the company as a whole. So right now, no red flags on Netflix. As a matter of fact, I did take a little bit of a new position on Netflix as a whole. At these levels, looking for that continuation, because you guys know if there's one thing I love, it's definitely those breakout retest trades. Now, moving on to NVIDIA. So NVIDIA also down 2.13%. But what we're looking for on NVIDIA here, guys, right? Looking for the continuation of the daily uptrend. We got it, looking not too bad. Anything at this point above 115, this low right here, is going to be looking for a daily higher low for possible upside continuation. Where are we back testing, guys? Breakout, retest of this whole support level, which should now be green because we just broke through it. Let me change it for you, just so it's not like an oxymoron, right? I'm not saying support with a red area. So moving on to this, not looking too bad, right? All the short-term moving averages are right there, looking for the retest and possibly run. Could be a very decent trend expansion trade right there, guys, if you're willing to take the risk. I mean, the risk reward is not the best on this trade, admittedly, right? The stop loss would have to go below the 115, and the take profit, unfortunately, is only at about 131. So you're risking about $5 to the downside, looking for maybe $8, $9 to the upside. It's not a true 2-to-1 trade, but there is a little bit of a swing trade here on NVIDIA. On the weekly, not looking too bad either, but looking a lot like the SMH index that it's modeled after because it represents like 15% of the weight in there. So, right, possibly due for a tightening range. In the event the bulls give this range up and roll this one over, same thing as SMH, guys. Best case scenario for the bulls, possibly just a tightening range as we head into a lot more semiconductor earnings throughout the month of October. And of course, for the weekly uptrend confirmation, we need a break and close above 131 if you truly want this one to be back into a weekly uptrend. So NVIDIA, I continue to say, guys, if we get to see some big declines on NVIDIA in the next coming weeks, I'm looking for those 3, 4, 5% candles to the downside, something like this. I will continue to write short puts in my desired area, which is below 110. I want 110 out of 100 to be writing some short puts for this stock as I'm looking to kind of accumulate the lower levels, similar to what we had last fall of 2023. Moving into Tesla. Tesla has been one of the biggest winners of the week so far in big tech for sure. Looking extremely good. Has been very, very bullish after the whole rate cut started, right? And with good reason, right? It's one of those interest rate sensitive stocks. Them solar stocks as well have been heavily have been heavily benefiting from that, the jumbo rate cut, the 0.5% rate cut, and the additional 0.5 that's coming throughout the rest of the year, and the additional 1% that's coming later on in the year as well. So moving on in here, guys, daily uptrend is just completely gorgeous on Tesla at this point. No real red flags, signs of slowing down. We are coming into big resistance, right? This whole 260, 265 is a challenging zone for Tesla, not just because of the most recent time in July, back here, back here, back here. Very challenging area for Tesla to get through. If we do get through it, guys, the next target is truly going to be all the way up at that 300 level. Keep in mind, Tesla deliveries are coming in on pretty much next Tuesday. We get the deliveries numbers. Then shortly after that, Wednesday the 16th, we have the earnings. And at the in or around the same time as well is the robo-taxi event. So a lot of possible bullish catalysts coming into Tesla moving forward. But are they going to be a sell the news event? Well, that is going to be the million-dollar question, guys. If you ask me, I truly don't know, right? These can go either way, as we saw prior. This was a sell the news event. We got a lot of bullishness leading into it. And then when they delayed the robo-taxi event, kind of just fell off a cliff, right? Now, this one's been pumping because of rate cuts, anticipation about better deliveries because we got good data out of China recently, and also expectation of easing pressure off of the consumer, which could stimulate demand. So is this going to be another case of buy the rumors, sell the news? Truly anybody's guess. But if there's one thing that I cannot do, guys, is buy Tesla at such big resistance right now. I just can't do it. You either have to give me the breakout and retest of the range, then I can do it, or you have to give me a back test down here, right? If we were to start retesting some of these lower levels, 243 to 240, I could be tempted to make a little bit of a speculative bet into those delivery numbers, or rather, well, we might not get time before deliveries, right? Because it's very soon, or prior to earnings. That I can possibly do, but I can't really do it up here. So if we do start consolidating, anything above 223, looking for the daily higher low for possible further trend continuation. On the weekly is looking beautiful. Gorgeous weekly trend expansion by Tesla. Once again, coming into that overarching area of resistance above us, looking very good. Any consolidation, guys, so much space. Anything above 201, just looking for the weekly higher low for any trend continuation possible. So any pullbacks before earnings, I'll be tempted to make a speculative gamble on Tesla, but I probably won't be going heavy at all on this one, guys. It's ran a lot so far, and obviously we know that Tesla's not going to stimulate demand by snapping their fingers, right? Auto loan rates are still really, really high for the average consumer, and people are just pulling back on big ticket purchases because of the recession headlines that the media has been spewing out for the past 2-3 months. So is this bullishness just a temporary rally, or is it going to be sustainable? Well, we're definitely going to have the answer to that in the next 2-3 weeks as we move through all of these Tesla catalysts. Moving into Palantir right now. So Palantir just consolidating at the top right here. Nothing much to report on Palantir's end. Still struggling with the overhead resistance 38 to 39. That's coming all the way from back to 2020 and 2021. A lot of overhead supply right there. As a whole though, Palantir not looking too bad at all. Just keep a very close watch on this level right here, guys. 35.76. That is the daily higher lows, right? Lose that area without making higher highs. Daily downtrend will possibly be underway. And then you'll possibly be looking for some weekly consolidation. The weekly consolidation is what I'm personally looking at for some entries on Palantir stock. We're not looking for a massive decline like this, just maybe a weekly higher low, right? So if we start coming down a little bit on Palantir, maybe if the rest of the markets remain weak, if we get the infamous possible pullback on the QQQs, that may pull back Palantir a little bit. And if we can get a little bit of a dip right here into maybe the 35, 34s, it could free up some short put strikes, $32, $31. This is the area that I'd be looking to play Palantir on. But so far, the bulls are looking extremely, extremely, extremely strong. No red flags at all. Not giving anything up, guys. Just keep a close watch on the hourly time frame. As you can see, no hourly downtrends. They keep protecting the lows every single time. You'll know it when you see it, guys. Big hourly downtrend, loss of all of these moving averages. It's on the verge of rolling over, but it hasn't quite rolled over yet. So I'll be on the watch. If we do get that daily downtrend underway on Palantir and the weekly consolidation, I'll be looking to make some plays on Palantir down here. Just very, very tough for me to buy it up here at resistance, guys, right? And that's pretty much going to wrap it up for today's video. It's a bit too long if I start doing a portfolio update, guys. This one's going to be like an hour and 20 minutes, and it's logged me out of the account so far as well. So I'll do a more broad portfolio recap on Monday. I promise, guys, I'll spend a lot of time on it. Anyways, there's not going to be any position changes for me over the weekend, right? So spend a lot of time on the portfolio on the Monday session, probably a good 10 to 15 minutes, and explain all the trades. All I can say is that it's been a very good week. We've made a lot of nice swing trades on shares, on call debit spreads, a lot of nice wheel trades as well, but we're staying very, very cautious, guys. I've wound down a lot of positions in the portfolio as I was explaining. Moving into October, expect to see a little bit fewer trades from me in the portfolio, so you'll see less positions, but you'll see heavier size positions, right? So we're going to be going for quality over quantity in these markets, because we know that even though the markets have been very bullish as of recently, we also know that we have to be a little bit cautious, right? We cannot just forget about the whole red flag situation in the economy and the whole potential of a more than soft landing recession at play here, right? So cautiously optimistic at best and sticking with the highest quality plays that we can find out there. That's going to be the name of the game for me, October, November, and December moving forward. So higher conviction plays, more quality, less quantity as a whole. And that's pretty much it, guys. Hopefully you enjoyed today's video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also, consider subscribing if you're new. We do these videos every Monday through Friday after the close. Hope to see you back in a future edition of these videos. And lastly, if you have any questions, as usual, guys, always feel free. Anything you want, leave it down below in the comments, and I'll usually get back to you in 24 hours. Take care, guys. Always a pleasure. I'll see you over the course of the weekend, and peace.